If we are actually entering a recession and AI is a bubble and they're credit events, I have 100% confidence that the Fed and Treasury will react to that with overwhelming liquidity. And I think there is uncertainty in the market, right? It is this confusing economy and it's a confusing moment for the Fed. It actually makes me a little bit nervous that we're at 90%. It feels like there's probably risk in that if we don't get what we expect. But I think the long-term trajectory is down as we enter 2026. I really think that's where the question is, like, where will rates bottom in this rate cutting cycle? I think we can get to 56K if three things happened.
For weeks, Hougan explains, the crypto market has behaved irrationally, almost defiantly so. Positive news that should have lifted the market barely moved the needle. Headlines like Harvard tripling its Bitcoin exposure or Morgan Stanley going from 0 to 500 miles per hour in crypto accessibility, events that should have sent shockwaves of optimism, were met with price declines. Meanwhile, trivial negative headlines caused dramatic sell-offs. When good news is ignored and small bad news triggers fear, that's the hallmark of a deeply unhealthy market. But in the last few days, something has shifted. Major good news, the end of quantitative tightening in the U.S., Vanguard opening its doors to Bitcoin, and Merrill Lynch enabling access to crypto ETPs actually triggered market strength.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
But for those 6 weeks, the thing that was happening in the market was it was looking straight past good news. We would hear something like Harvard has tripled its exposure to Bitcoin, which we should be shooting off fireworks. The smartest investors in the world are tripling down on our little asset. That's an incredible fact. The market went down that day. We heard Morgan Stanley went from 0 to 500 miles per hour. The market didn't shrug. And then we get like very minor bad news, like Bank of Japan woke up with a slight cold and the market would die, right? So when you're ignoring good news and overreacting to bad news, you're in this terrible market cycle. The reason I said the market looks good is we had some good news over the last few days. We had the end of QT in the US. We had Vanguard opening up to Bitcoin. We had the $3.5 trillion financial advisor giant Merrill Lynch opening up to crypto ETPs, and the market ripped. And that to me is a signal that the psychology is starting to change, that we're starting to look at good news as good, bad news as bad. That's a healthier market. Doesn't mean we go straight up from here, but I do think it's a definite shift and it's making me more optimistic for the end of the year. My own view of that is that Bitcoin should be trading much higher than it is right now. And it's been held down by this sort of bear market sentiment and those worries. I think the fact that we're at fear and greed of 20 with Bitcoin flat for the year tells you that that is the bear market, right? The natural price movement in that scenario is down 50. So we're in this weird market where sideways is bearish. And I do think we're closer to the end of that. There's not much more that sort of retail sentiment can fall. So it appeals to me that we've been in this bear market. My view is that it's been suppressing price from its natural level, which I think should be higher than it is. And I think there is uncertainty in the market, right? It is this confusing economy and it's a confusing moment for the Fed. It actually makes me a little bit nervous that we're at 90%. It feels like there's probably risk in that if we don't get what we expect. But I think the long-term trajectory is down as we enter 2026. I really think that's where the question is, like, where will rates bottom in this rate cutting cycle? I think we're in like a heads we win, tails we win scenario. And I don't mean to sound Pollyanna, but I think Bitcoin is somewhat pricing in an economic pullback and some of the uncertainty in the market. I think that's contributed to its pullback over the last 6 weeks. I think you can see that pretty clearly when you look at its pullback correlated with the pullback in NVIDIA and other things to speak to this AI bubble. So if the economy, in fact, is actually robust, and if AI is not a bubble and we recover, I think that's positive for crypto. If we are actually entering a recession and AI is a bubble and they're credit events, I have 100% confidence that the Fed and Treasury will react to that with overwhelming liquidity. I think we've outlawed recessions in the global economy. We respond to them with massive and ever increasing amounts of stimulus. And I just can't imagine the Trump administration allowing the economy to sort of peter off sideways. So in other words, if we have robust economic growth, I think that's accretive to Bitcoin. If we have a pullback into a recession, I think we have massive stimulus, which is also accretive to Bitcoin. So I do think there's an element of like heads we win, tails we win, regardless of which happens here. I think a lot of the things we're worried about in crypto are petering out at the end of the year. We're worried about front running the 4-year cycle. That ends on December 31st. You can't front run the 4-year cycle in the 4th year. We're worried about washout from the October 10th leverage liquidation event. Well, all of those companies want to wrap up by the end of the year. They don't want to have another tax year to report. So that washout is in my view going to end this year. You know, we're sort of getting past uncertainty around the Fed. There's just a lot that ends at the end of this year. And then you're born into the new year where you have Merrill Lynch and you have Vanguard and you have Morgan Stanley, you have institutional adoption. You probably have progress on crypto legislation. There are just a lot of catalysts. I think the reason we both anchored around Valentine's Day is because it'll take a little bit of time to cure. But I do think we're going back there because the negatives are ending and the positives are like ongoing and building. And I think that's about the right time frame. I think we could get to 56K if 3 things happened. Right? If the global economy severely slows down and we enter a risk-off market, if it becomes clear that the Clarity Act will not pass in the US Congress, and if a relatively major body floats to the surface from October 10th. If we got all 3 of those things, I could see us pulling back to those levels. But that would be a severe pullback from 126. That would be sort of a classic bear market. I think we're past that. I think the more realistic negative scenario, if we have a few negative shocks, is we go back to about where it was before the Trump election, which is like 72, which Chris Berniski and a few other people have called sort of the bottom. So I think 56K is unlikely. But if we get all 3 of those, you know, fastballs in the wrong way, then we could have a significant pullback. I just think that's a vanishing, unlikely parlay to get all 3 of those events happen. I don't think it's a sell the news event at all because I think the market expectation of it's happening is lower than 50% right now. So the market isn't pricing it in because the market is uncertain that it will happen. And I really have a strong view that solidifying the regulatory environment in the US, which for better or worse, the world's largest financial market, will unleash a really significant wave of Wall Street investment and entrepreneurial activity. So I think the market is probably underestimating the impact of a market structure bill because unless you've worked in crypto, you haven't felt the true depth of the pain from the regulatory uncertainty. And it's underestimating it because it's not sure it will happen. So again, if it does happen, if we see that signed into law, I think 2026 is a massive up year for crypto. And I'm really bullish about a lot of categories. Yes, we've had all these good news and the crypto market has been mixed, but it's worth noting that the market is flat this year and the fear and greed index is at 20, which is extreme fear. So we have extreme fear and panic and blood in the streets with a flat market. That's because you have all these slow positives that just play out over a decade, lifting the market up. It gets knocked down by the October 10th event, but it comes back up. It gets knocked down by, you know, this or that negative concerns about MicroStrategy being removed from MSCI indexes, what's going to happen. All these short-term news, yes, are headwinds, but then you have this tidal wave slowly coming in. And the reason I'm so excited about Merrill Lynch, maybe it's because I'm close to it, because I know next year, Bitwise will do 1,000 meetings with Merrill Lynch advisors talking about Bitcoin and crypto. And they're going to start allocating a little bit and then more and more and more. And if you're playing the long-term game, it's like a door open that won't ever be closed. There is now money moving in, and that just makes me really excited.
Despite the market chopping sideways, Hougan emphasizes that institutions are in a bull market, retail is in a bear market. Their behaviors collide and flatten price action. Merrill Lynch's involvement alone, $3.5 trillion under management, could translate into $35 to $140 in flows even with a modest 1-4% allocation. That's more than the Bitcoin ETFs have brought in over 2 years, and that's just one firm. Morgan Stanley, UBS, Wells Fargo, they're all moving in the same direction, but institutions move slowly, painfully slowly. The average advisor allocates after 8 meetings, many meet only quarterly, and crypto is typically 2% of portfolios, which means advisors spend mere minutes per week thinking about it.
I think Merrill Lynch is a giant deal. That's $3.5 trillion, 1 to 4% allocation. You can do the math. That's 35 billion to $140 billion. That's more than ETFs have brought in so far in the last 2 years. And that is just one company. There's also Morgan Stanley doing the same thing. There's UBS making strides. There's Wells Fargo. There's like this slow, grindy tidal wave of inflows. And that is the latest signal. I think it's a really big deal. I agree QT's a big deal. It's amazing that we rallied for the last 2.5 years while the Fed was squashing liquidity. But man, I get excited about those Merrill Lynch advisors now being able to allocate and learn about crypto. I think it just is a slow rising tide that lifts us higher. I think it's a little bit like the broad economy. Like the broad economy is like doing well and people feel terrible about it. And I think that's sort of vaguely what's happened. There's almost like two markets in crypto. There's the retail market, which is in a deep bear market. And then there's the institutional market, which is in a bull market. And when you smash them together, you get this sideways chop. And I think that's really what's happening. There's almost like these two psychologies and two news trends happening at once, and they're meeting in the middle. I'll tell you 2 depressing facts about the financial advisor part of the market, and the reason this is a slow burn. One is that the average Bitwise client allocates to us after 8 meetings, and many clients operate on a quarterly meeting cycle. So 8 meetings is 2 years, which means if you started talking to us when Bitcoin ETFs went out and you didn't know anything about Bitcoin, you're just now about ready to make your first allocation. So that's depressing. And then the other thing is people imagine these institutional managers spending 100% of their time managing portfolios. What the studies show is that financial advisors spend 5 hours a week on investment management. 5 hours a week, and then crypto is 2% of their portfolio. What is 2% of 5 hours? It is nothing. It's a handful of minutes. So these guys have a few minutes each week to think about crypto. They move on a glacial pace. You should think of these as very slow move, like a decade-long trend of accelerating interest. The good news is it only compounds and goes up. But the bad news is, yes, it is slow. Tokenization is going to be slow. Stablecoin adoption, I think, will happen faster because that's sort of commercially driven, but tokenization and investment is painful, painfully slow. It's really positive, really strong, but painfully slow. I think crypto uses way too many buzzwords, and the buzzwords are terrible. Rick Edelman points this out. You say something like trustless, people like trust. You say zero knowledge proofs, people like knowledge. These are terrible buzzwords that turn people off. And we should scratch them from our vocabulary. And then the third thing that I think crypto natives always get wrong is that they focus on the reward when what most of the people coming into crypto will focus on first is the risk. If I go and pitch to an investor about Bitcoin, they don't really care that much if Bitcoin goes up 50% or 100% next year. That's not the deciding factor. What they first want to know is, will you lose my Bitcoin? Will it blow up? What is the correlation? What is the risk? So putting risk first in the risk reward equation, I think would be very effective in onboarding a lot of people. Yeah, I think it's a pretty important thing. One of the reasons we didn't talk about this 8 years ago is not just we didn't pay as much attention to the Fed, but it wasn't as politicized, right? Like we didn't think about Jerome Powell as like aggressively hawkish or aggressively dovish. We just thought of him as like an establishment candidate that would maintain the status quo of the Fed. And now it's much more politicized. I think Hassett is certainly on the dovish side of the camp. I do think maybe you could argue he's somewhat beholden to the Trump administration, or at least has been very close to them. The administration is clear that it wants lower rates. I think you've done well just to accept, not it's good or bad, but the administration has generally gotten what it wants. It wants lower rates. I suspect there will be lower rates. That's my interpretation of this appointment. That's without arguing there should be lower rates or not. I actually don't have a strong view there, but I do have a view that that's what the administration wants. It's likely to get what it wants, and Hassan is probably the person who will deliver that. Yeah, I mean, there are a lot of ways to make this point, but maybe this one will come across. For the first 5.5 years at Bitwise, I used one deck, one presentation deck, which was like, what is crypto? And I would walk through the very basics 101. I probably gave it 1,500 times. That's not an exaggeration. Now we have a full-time person at Bitwise that all he does literally every day is create new decks. We change our narrative on a quarterly or biannual basis. And that reflects the fact that people have moved past 101 and now they want to know the specifics. Now they want to know about stablecoins, about tokenization. Now they want to know about prediction markets and digital identity. Now they want to know what's going to happen with quantum computing and Bitcoin. They want to know where it fits in a portfolio. It's really just a dramatic change. We did this sort of 6 years of this core education, and now it's really about implementation. It's really remarkable. Yeah, I mean, we have 25 salespeople who are in every geography, as well as people on the phone. And then when they have serious questions that go beyond those local experts, they call in Ryan or they call in me, and we'll show up and answer those questions. So, yeah, I mean, that we do 15,000 meetings a year. And when you open, and that's just Bitwise, right? There are other firms doing this too. That's why I mean that there's like an inevitability once those doors open. It doesn't mean we get $1 trillion tomorrow, but it does mean that the flows start to trickle in and they build over time and over time. And maybe because I'm so close to it, just knowing that that door is open makes me extraordinarily excited.
Matt Hougan's message is clear. Despite the noise, the fear, and the short-term chop, we're living through one of the most important transitions in Bitcoin's history. The retail market is exhausted. The institutional market is awakening. Regulatory clarity is approaching. And the economic backdrop, whether bullish or bearish, funnels liquidity and attention toward Bitcoin. The tidal wave isn't coming, it's already building. And once it crests, the market will look back on this period with astonishment that Bitcoin ever traded this low with this much structural strength beneath it.